Nvidia and AMD just struck a deal with the US government about AI chips for China. They'll give 15% of their revenue from these sales back to the government. In exchange, they get the export licenses they need. This means they can keep supplying advanced processors to China while staying within US trade rules. It's a win-win for both companies and the government. Before we begin, this video is not an investment advice. You must do your own diligence. However, with my years of investing experience, this content has a solid research foundation. Check our Patreon in the description below for exclusive access to one of the best buys now. We'll also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you never miss out. The U.S. Commerce Department is now issuing export licenses for Nvidia's H20 chip and AMD's MI3 and 8 chip. This is a crucial step for both companies to keep supplying their advanced processors under strict government oversight. Nvidia has responded, emphasizing their commitment to following U.S. government rules in global markets. They're dedicated to compliance while meeting international demand. This move could reshape the tech landscape, ensuring innovation continues responsibly. Nvidia had a bold plan, developing the H20 GPU just for China, but then U.S. export restrictions hit hard, blocking their advanced chips. In April, the H20 was added to the list, and Nvidia had to stop sales. They took a $4.5 billion hit on their first quarter results. By July, hope was on the horizon as Nvidia sought to resume sales. They were told licenses would be granted soon, but then came the catch. A 15% revenue sharing requirement? That was a surprise. Just another twist in the tech game, right? To understand how the new agreement could impact Nvidia's financials, let's look at the numbers. In the first fiscal quarter, Nvidia sold about $4.6 billion worth of H20 chips in China before export restrictions hit. Another $2.5 billion worth of chips were produced but couldn't be shipped due to the new rules. Without those restrictions, total H20 sales would have reached roughly $7.1 billion, over 15% of Nvidia's revenue for the quarter. This highlights the significance of the China data center business for Nvidia. Moving forward, investors shouldn't expect H20 sales in the second quarter, as restrictions were in place the entire time. However, sales are expected to resume in the third quarter, from late July through late October. Nvidia estimates a loss of around $8 billion in H20 sales for the second quarter. If growth continues, third quarter H20 sales could hit about $9 billion. Under the new agreement, 15% of that, around $1.35 billion, would go to the U.S. government. While $1.35 billion sounds big, it's just a small share of Nvidia's overall revenue. In the first quarter, Nvidia reported over $44 billion in total sales, making the government share only 2 to 3% of overall revenue. That's a minor cost compared to losing the entire Chinese market for these chips. Handing over 15% of H20 chip sales to the U.S. government might seem like a blow to Nvidia's profits, but honestly, it's just a minor bump in the road. Nvidia's data center business is one of the most profitable in tech. In the first fiscal quarter, their adjusted gross margin was over 71%, and their net profit margin, more than 56%. That means they turn over half of every dollar into profit. Pretty impressive, right? So losing a slice of H20 revenue won't hurt them much. With H20 making up just 15% of total sales, the impact is limited. Nvidia's momentum is still strong, and their stock will keep climbing despite this deal. If you enjoyed our video, give us a like. Don't forget to subscribe and ring the bell so you never miss out. Want an inside scoop on the best buy and sell stocks every week? Check out our Patreon for exclusive insights.